Well, the Federal Reserve came out today and announced unlimited quantitative easing, which is going to collapse the dollar in the long run. But we'll get into that in a minute. Last week they announced $700 billion and they lowered interest rates back down to zero. And people are saying in the media that the Federal Reserve is doing this because it wants to help the economy. You know why they lowered interest rates down to zero? Because the federal government can't afford a higher interest rate with all the money that they're about to borrow. That's why. If the federal government had to pay 2, 3, 4% on 24 trillion, which is about to be 30 trillion, probably in the next couple of years, the amount of interest on that money is almost $1 trillion alone. In fact, I think it might be more than $1 trillion. I'd have to run the numbers. But the point I'm trying to make is that this is not going to work. You can't just put money into the economy without causing long-term catastrophic impacts or consequences. And yes, the economy is in shambles because of the coronavirus. People are getting laid off. I'm sure they're happy about getting their check, right? But I'll tell you what I'm spending my check on, and that is silver and gold. Silver and gold rallied today following the Fed's announcement. And I think the market is starting to realize that this is the new normal. This is what the Federal Reserve is going to do. And people are flocking into gold and silver. I mean, silver had a huge sell off. And in fact, at 6 this morning, it was still under $13, as you can see right there at $12.60. And now we're at $14. So people don't understand what this is going to do long term. I mean, the federal government is going to keep borrowing money into infinity. That's why they're calling it unlimited QE, or some people are calling it QE infinity, because ultimately, without the Fed, bond yields would skyrocket and you would have a dropout in the treasury market with what's happening. But the Federal Reserve is pumping money in, and they're going to continue to do that. The problem is that in the long run, and I'm not saying this is going to happen next month or even next year, of course it could, but in the long run, all this money printing is going to catch up with us. And that's the problem. Uh, you know, People just don't realize the economic impacts, and it's really sad because they think that the government just has this unlimited supply of money. But the federal government doesn't have any money because the fact that they're going to the Federal Reserve and asking them to buy treasuries. I mean, Donald Trump has been pushing Jerome Powell for a long time to lower interest rates and do more QE. In fact, he wants rates negative, which is completely idiotic. But that's another video. The point I'm trying to make is that it's really sad that people don't understand the economic impacts. And people literally think the government has all this money sitting in a bank account. They don't. All they have is the Federal Reserve. And the Federal Reserve is going to keep doing this because as long as the coronavirus goes on, as long as the market keeps on tanking, the Federal Reserve will pump in as much money as they want. And all this money, yes, it's going to go to bail out the airlines. It's going to go to bail out individuals. But printing more money doesn't solve the problem. And the problem is a problem of productivity. We have too much debt in this nation. We don't have enough savings. And we're not productive enough. And so the problem is that we're printing all this money and they think that's the solution. And that's the really sad part. But let me go over this article real quick. And, it's just basically talking about how last week the stock indexes fell more than 10%. The central bank made an emergency 50 basis point cut to the Fed funds rate and announced a 700 billion quantitative easing program. And since then, it has made several other moves in an effort to keep financial markets functioning effectively. But on Monday, the Fed took its liquidity providing efforts to another level. Unlimited quantitative easing should help calm markets, but it didn't. And the Dow Jones and the stock market indexes were down big today. I think they're down like 5%. The only investments that I saw that were up were gold and silver. Isn't that funny? The stock market's selling off, everything. You can't find safety anywhere but gold and silver. And I think that's because people are finally starting to realize what's happening. I mean, when the Federal Reserve made the initial announcement of quantitative easing, people initially sold gold and silver. But that's changing, and that's going to continue to change. And the long-term trend for gold and silver is bullish. I mean, look at this chart of silver. This is right when the Federal Reserve announced quantitative easing, 2009, right around there. Get into 2010, and then 2011, when we're at the height of the QE, we see the price of silver go parabolic. And if the quantitative easing continued, the dollar would have collapsed. I guarantee it. But it is going to continue, and it's not going anywhere, and that's what people don't realize. And I think this will turn into quantitative easing infinity, especially if we get one of these crazy Democrats someday, probably not this election, but like, Bernie Sanders or Elizabeth Warren or any other type of communist socialist who is going to come in there and they're going to print money and say, hey, we'll give you a check every month. I mean, if you think you're going to get a $1,200 check just once or twice, think again, because with Bernie Sanders and Elizabeth Warren, you're going to get a check every single month, right? You're not going to have to work if you don't want to. But the problem that creates is that you have all this money flooding throughout the economy. And if people aren't working, they're not producing. So there's less production and businesses will go out of business. And that's going to create hyperinflation if we get that. The only thing stopping it now is that all this money is, or during the last quantitative easing, I should say, is that all the money went into the stock market. But now the money's going straight to the government, and the government's talking about giving it to the people. So who knows if this will be permanent? I really hope not. But like I said, with a Sanders or Biden, or not Biden, but Sanders or Elizabeth Warren administration, it would become permanent if they were able to get anything like that passed through Congress. And that's the really sad part about socialism, and that's why it doesn't work. But I mean, when you look at all these other nations like Weimar Germany, like let me show you a picture of a chart of Weimar Germany hyperinflation. I just want to pull this up and show you because this is really crazy. I mean, it only took like a year, and I don't think people realize just how much money the Fed's printing and what kind of impact this can have. But of course, the one thing holding it up is the fact that the dollar is still the world reserve currency, and so we're able to export a lot of our inflation. We are. But when that comes to an end and people start selling dollars on the FX market and people start dumping treasuries in droves, they're going to have to ramp up the QE even more, and that's going to really cause problems. I don't know why my chart isn't loading, but I wanted to show you a chart of how much a loaf of bread cost in 1922, 1923. I'm sure you're familiar with that. But basically, Weimar Germany, they had massive debt. They couldn't pay it, just like the United States can't pay their debt. And so they inflated the currency. And what happened was a loaf of bread cost trillions of marks. And it only took a very short period of time. And it's not loading. I'm sorry about that. But that's coming to the United States if we don't stop these crazy policies. Problem, government, problem, government, problem, government, problem, government, problem, government, and the Federal Reserve are the problem. And the fact that the government can just go to the Fed anytime they want and say, hey, we need money, give us some money, it's not sustainable. So you need to prepare. You need to buy silver and gold. You need to buy physical silver and gold. Forget the ETFs. Forget the paper market. Get real physical silver and gold. Hold them, own them, and get out of treasuries, get out of the US dollar because it's going way down. Anyway, guys, thank you so much for watching. And if you like this video, please hit that subscribe button.